Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to our world of real-life trading, and with me, as always, on a Tuesday evening is Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, the market's been all over the place in the last couple of days, but I'd like to start off with the last trade for the portfolio, which was a short on Kumba, and looks to have worked out pretty well, almost as well as you wanted it, not quite. Yeah. But tell us what's happened and how that short played out.
Yes, that's right. So we did put a short on for our portfolio last week in Kumba, as you mentioned. The chart of that trade is up on the screen at the moment. What really got me here was that at the time I said I felt that the market was looking like it was due for a bit of a pullback. And if you're wanting to play on the short side in a pullback, ideally you want to try and short the weakest stocks in the market. And Kumba certainly has been amongst the weakest stocks in our market for a while now. It is trading below the 50-day moving average, which is that blue line on the chart that you see there. And that for me is always a first filter as an indication of which way the medium-term momentum is pointing. So in this case, it's definitely pointing down, and you can see there's a pattern of lower highs and lower lows on the price chart itself there. Now, what I'd identified last week was that we had this bear flag structure on Kumba. And when I saw that, I looked for a breakdown below the bottom end of that flag structure. I went short of 390 CFDs at 438 Rand, and it promptly fell quite nicely.
Which is always nice when that happens.
It is. It's great when a trade works straight off the bat, because then it often means that there are other market participants seeing things the same way that you are seeing them, and therefore it kind of becomes a bit of a self-fulfilling exercise. So this was great that it started to work so quickly for us. The stop loss was at 452 Rand, and that level was never violated. And the stock did trade down. I was actually looking for it to go down towards 400. Now, I suspect we might still actually see it there. I mean, the trading action in the stock still looks weak, and it still looks as if we probably could have another revisit of 400. But having said that, I actually did close out the trade at 408 Rand 50 last week. And I'll show you why when we look at the chart of the top 40 in a minute. But basically, my thinking was that the market as a whole was at an area of support, and I would prefer to cover this short position rather than stay short of it in a rising market. Yes. We made a profit of 10,842 Rand after all costs were taken into consideration. So a decent result there in the end.
I mean, that's not bad for a couple of days' work, because as you said, the trade worked out almost immediately. Yes. So nice to see, and maybe, you get towards the end of the year, you're also trying to build onto a portfolio and not make any wild moves as far as your trading is concerned. So nice one, Garth.
Yeah,
but
thanks.
Okay, so the thinking behind closing it out early, and I know you want to bring up a graph of the top 40, which is our old friend, certainly this year.
Yes.
What is behind that?
All right, well, here it is. So this is a chart of the top 40 that we've got up on the screen at the moment. What I was seeing really was that we've got this uptrend which goes back to the June lows, and you can see if I join those low points from June and again in October and again now recently, there's support on our market, on our top 40 at around about 40,000, and we do seem to have found some buying interest at that level. Certainly we're not running away at the moment, but there was a bit of buying interest down there. You can see from our stochastic oscillator on the top that we are getting into oversold territory. So with that being the case, I felt that the market could potentially be due for a small bounce whilst we remain above that upward trend. But something interesting here is, remember that we've got this option structure in the back of our portfolio. We haven't discussed this for a long time because it's mostly been out the money, and therefore we've kind of ignored it, but it's been sitting there in the background providing a bit of insurance for us, if you like. And effectively, without going into the intricate details of how this thing works, what it means is that basically above 40,000 here, we've lost our option premium of 2,618 Rand. And then below there, we start to make money, and we make our maximum profit on this structure at 37,000 on the index, which gives us a profit of 53,000 Rand. And then that profit will start to dwindle away if the market were to go lower than that. Bearing in mind, these levels along the bottom axis here represent the levels on the top 40 future. All right, now the interesting thing is that with our market having pulled back towards 40,000 over the last week, that basically gave me an opportunity to buy the top 40 future against this structure. Okay. And what I did is I went long of 1 December 13 Aussie 40 future at exactly 40,000, which is pretty much around about the level where the index bottomed over the last week or so. Now, the interesting thing about that is because we've got that protection on the downside and we're effectively exposed to 2 options contracts on the lower end there, I've gone long of 1. By doing that, what I effectively do, if you look at the payoff profile, is I actually now create a payoff profile that looks like this. So instead of before it looked like that, now it looks like this. And what you can see is that around about this 40,000 area is we've actually got what is it's a V-shaped payoff on our structure. So irrespective of whether the market goes up or down from here, we will make money, whichever direction the market were to go from here. Again, we still make our maximum profit at 37,000, but that is lessened now because we've effectively put it.
I mean, we've moved so far away from that.
Yeah, we have. That's it. You know, I think realistically speaking, we've got 1 month to go until the December futures close out. To expect us to drop below 37,000, by then, I think is a highly unlikely scenario. I think more likely, and a lot of commentators are calling for a market rally into the end of the year. And I mean, whether that actually transpires or not remains to be seen. But if we do get that, then now we've actually got a bit of exposure on the upside here. But if the market were to drift a little lower, we get exposure there as well. So we've actually got a really nice payoff here in that irrespective of whether the market goes up or down, we're going to make money on this structure now.
I mean, Murphy's Law, the market's going to stay around 40,000 exactly, which is where you don't make anything. So let's hope it moves either direction of that. Garth, but as you say, it gives you the confidence to trade either direction or more confidence in putting on trades for the portfolio because you know you're sort of protected to the downside.
Yes.
You gain there and you're protected to the upside, you'll be gaining there too.
Correct.
So it does kind of free you up, and that's always quite important, not feeling constrained in your trading.
The best trade in the world is a risk-free trade, and you don't get many of them, but this effectively constitutes almost a risk-free trade. I say almost because of course, if the market crashed 20% tomorrow, we'd sit with a problem on our hands, but I think that's extremely unlikely.
Okay, Garth, so you've closed out Kumba, bought against the structure that you had in place a couple of months ago, and you've also entered a trade in Standard Bank, which was one of the shares that you highlighted a couple of weeks ago. Yes,
that's right. Regular viewers will know that I've discussed the chart of Standard Bank recently, and I've said I'm watching this one very, very carefully. Now, here's why. This overhead resistance level at 120 Rand goes back over the last six or 7 years. Effectively, this is 2007 that we're talking about back here, and you can see how this index has bumped up against 120 Rand numerous times over the last 7 years. And it's finally now, in the last couple of months, broken out above that resistance at 120. Now, what it appears is if we're getting a little bit of a retest and pullback, and that sometimes you call that a goodbye kiss of that what was resistance, it now becomes a support line. Now, if I zoom in on that, we'll have a look at it. There's our 120 Rand level. This is now looking at the trading action through 2013 to date. We've got our 120 Rand level there. You can see this price broke out through there. It's pulling back towards that now. We're getting nice and oversold on our stochastic here. Also, what else do we have? Well, we've got an uptrend that goes back to the June lows, and it joins all the low points since then in a very nice, tidy fashion. We've also got what's looking to me like you can call that a falling wedge structure. You might also call it a bull flag structure, but whichever way you look at it, that's a bullish consolidation pattern. We are looking at, I've bought some of these for our portfolio at 123 Rand. Now, I've only done a half position for now. And I'm waiting. If we get any further weakness back down towards 120, I'll buy the other half of this position. Or alternatively, if we start to break out through the top of that falling wedge structure over there, which is at around about 126 Rand, if we start to break out through there, then I'll buy the other half of this position. So for now, I've put I've put one foot in the water, as it were, and I'm waiting to go in with the other foot, but I want to just see and play it carefully.
I mean, someone would say this isn't much of a conviction trade if you're waiting to do either, but, you know, sure, but you want to be a bit safer.
Yeah, I'm finessing my entry here. You know, sometimes when you trade it, it's not a bad idea to finesse your entry a little bit, and that's what I'm doing here. That's why I've gone in with a half position. If I can get the other half a little bit cheaper, I'll be glad. Yeah. But if I can't and it starts to break out, well, then that's also good news because it means that our trade is working for us.
Okay, so you have put the trade on for the portfolio, Garth?
Yeah, I have. If we go and we have a look and break it down, I've bought at 123 Rand. I'm putting my stop loss at 118 Rand. My risk per share, therefore, is 5 Rand. I'm risking at this point only 1% of our portfolio. We've got 380,000 Rand in the portfolio, so 1% of that is now 3,800 Rand. I will put the additional 1% risk on, given one of the two scenarios that I explained before. I take the portfolio risk and divide it by the risk per share, and that gives me 760 shares, which translates into 760 CFDs. I'm looking for a target here of 130 Rand, and my risk to reward ratio therefore is 1 to 1,4. Now that risk reward ratio might not look too great at the moment, but the point is if I get the other half of this trade at the lower levels, then it will improve our risk to reward ratio significantly. The other thing also is that I've put a target of 130 Rand here as a short-term target. Maybe if we get a rally into the end of the year on our market, that's achievable this year. But from a much bigger picture perspective, I think we can go well beyond that 130 Rand level. And I think next year, this is one of the stocks that I really like the look of. I think that breakout through 120 Rand on Standard Bank is exceptionally bullish. And this would potentially be the kind of stock that I'd want to hold as a core holding for next year's portfolio. And we might look to do that as, maybe build a position perhaps for next year if you'll have me back on the show.
Oh, Garth. I'll have to think long and hard about that. Garth, just Standard Bank, it did outfox us in the beginning of the year because this is the exact same setup that you had pointed out, this going back to 2007, the 120 Rand ceiling that it's bumped up against. And we were very hopeful it might, and then of course it came down again. But this time, as you say, it has actually broken above that, so that looks better.
I think the way we're trading it this time is the safer way to play it. Before, earlier in the year, I tried to buy it in anticipation that we were going to see a breakout through the resistance, and then that never happened. Now we actually have a confirmed breakout through that resistance area. We're now consolidating above it, pulling back to support. So I would think that this time it's a much higher conviction trade than what I was doing earlier in the year where I tried to preempt a possible breakout.
Yeah. And just on the notion of core holdings, we haven't really had any. We started off last year with some core holdings that we held, like Naspers and Aspen, actually, that did very, very well for us, and unfortunately probably would have done very well for your portfolio this year. So is that something that you would look at going into next year?
Yeah, potentially. Look, I think next year is going to be a very different kind of year. I think with the market valuations where they are at the moment, I would expect that we're going to be sideways and choppy in our market next year. And I kind of get the feeling we're going to need to adopt a different trading strategy to what we've used this year.
Yeah. Okay, guys, so that's the latest trade. So it has been actually a very busy week. So what does the portfolio look like?
All right, it looks like this. So there's our option structure that we spoke about. We've got that one long contract on the top 40 now, which is up about 3,800 Rand for us. There's the Kumba trade that we banked a profit of 10,842 Rand there. We're now long of these Standard Bank futures, CFDs rather. Our portfolio is sitting at just over 380,000 Rand, so that's up 52% for the year to date.
So it was 53% return that you made last year, so let's try and beat that. Let's try and get to 60.
Well, that's it. We've got about a month left, so we've got a bit of time on our side. We'd like to try and beat the 53% that I made last year.
Okay, well, things are looking good so far. Garth, and then to end off with your next face-to-face sessions and also courses.
Yes, I've got a face-to-face session on the 28th of November from 6 p.m. until 8 p.m. I'm going to be looking to 2014, and I'm trying to come up with 14 stocks that you want to own in 2014. That will be the theme of the evening, but it's also an interactive session. People can bring their questions. I have my charts on hand. We can do analysis live in the venue. We can discuss ideas and bounce them back and forth. If anybody's interested in attending this session, you've got to please go to my website, traderscorner.co.za, and register to attend. It is 200 Rand per head to attend these sessions. Okay. And then, lastly, my course. I've got a high probability trading course in Durban this weekend on the 23rd of November. This will be my final course of the year, and then I'll start it up again next year. But anybody that's interested in attending can email me, garth@traderscorner.co.za, and then I'll send you the details.
Okay, great, Garth. We'll leave it there. Thanks as always for joining us on the show. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.